Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Bristol-Myers Squibb Co., a global biopharmaceutical company that develops innovative medicines for patients with serious diseases. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Bristol-Myers Squibb has been a key player in the pharmaceutical industry for decades, but from a behavioral finance perspective, how do bias, like confirmation bias and the sunk cost fallacy, influence their decision-making, especially in areas like drug development and market strategy?
Confirmation bias is particularly relevant to Bristol-Myers Squibb's approach, especially in drug development and clinical trials. In the pharmaceutical industry, the stakes are incredibly high, and once a company has invested heavily in the development of a new drug, there's a natural tendency to seek out data that confirms the drug's effectiveness and downplay or ignore results that may indicate potential issues. This confirmation bias can lead to an overestimation of a drug's potential and may cause the company to continue investing in a project even when it might be more prudent to reconsider or pivot. The sunk cost fallacy is another critical factor, particularly in how Bristol-Myers Squibb manages its R investments. Developing a new drug is a lengthy and expensive process, and the more resources a company has invested in a particular drug, the harder it becomes to abandon the project, even if new data suggests that it may not be successful. This bias towards continuing with the project due to the resources already invested can lead to inefficient allocation of resources and potentially costly delay in bringing more promising treatments to market.
And this combination of confirmation bias in drug development and the sunk cost fallacy in our investments has shaped Bristol-Myers Squibb's approach to pharmaceutical innovation, appealing to both healthcare providers and investors who value breakthrough therapies and scientific rigor.
Exactly. Bristol-Myers Squibb's strategic use of confirmation bias in reinforcing its drug development strategies and the sunk cost fallacy in our investments appeals to investors looking for a company that is committed to scientific advancement, even in the face of significant challenges. However, this approach also means that Bristol-Myers Squibb must carefully manage the risks associated with drug development timelines and regulatory approvals, particularly as the pharmaceutical landscape continues to evolve with new competitors and scientific breakthroughs.
Let's talk about diversity, equity, and inclusion at Bristol-Myers Squibb. As a global biopharmaceutical company, DEI is particularly important for Bristol-Myers Squibb. How does this intersect with behavioral finance?
Bristol-Myers Squibb's approach to DEI is crucial, especially as the company operates in a global and highly specialized industry where diverse perspectives can drive better decision-making and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance Bristol-Myers Squibb's ability to innovate by fostering a culture that values diversity and inclusion. A commitment to DEI allows Bristol-Myers Squibb to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in pharmaceutical research and development. For investors, Bristol-Myers Squibb's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Bristol-Myers Squibb build stronger relationships with patients, healthcare providers, and regulatory bodies, reinforcing its brand as one that values inclusivity and patient care.
Investors are increasingly considering DEI when evaluating companies, especially in healthcare, where the ability to innovate and serve diverse populations is critical to long-term success.
That's right. By embedding DEI into their corporate culture and innovation processes, Bristol-Myers Squibb not only improves its ability to serve a broad range of patients but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to global markets, Bristol-Myers Squibb operates in numerous countries, developing and distributing medicines to patients worldwide. How does the company adapt to different markets, and what role does behavioral finance play in this?
Bristol-Myers Squibb's global strategy involves tailoring its medicines and healthcare solutions to meet the specific needs and regulatory requirements of different regions while maintaining its core focus on innovation and patient outcomes. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with operating in diverse markets. Bristol-Myers Squibb's ability to navigate complex international regulations, such as those related to drug approvals and healthcare standards, allows it to maintain a strong global presence. The company's approach to understanding local market dynamics and adapting its strategies accordingly helps mitigate risks associated with regulatory changes, economic fluctuations, and cultural differences. By ensuring that its medicines are relevant and compliant in different regions, Bristol-Myers Squibb can continue to expand its market share and strengthen its global brand.
And this adaptability is essential for Bristol-Myers Squibb, especially as they face competition from both local pharmaceutical companies and other global giants. Their ability to maintain their brand's relevance and leadership in different markets is key to their continued success.
Exactly. Bristol-Myers Squibb's focus on understanding local market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the pharmaceutical industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in global healthcare needs, regulatory environments, and competitive pressures.
Now, let's compare Bristol-Myers Squibb to other companies in the pharmaceutical and biotechnology sectors like Pfizer, Merck, and Amgen. How do the behavioral finance dynamics differ?
Bristol-Myers Squibb's dynamics are often compared to other pharmaceutical giants like Pfizer, Merck, and Amgen, particularly in their approach to drug development, market expansion, and competition. Bristol-Myers Squibb's strength lies in its focus on innovative therapies for serious diseases, appealing to investors looking for a company that prioritizes breakthrough treatments and long-term patient outcomes. Pfizer, with its broad portfolio across vaccines, pharmaceuticals, and consumer health products, appeals to investors interested in a company that balances innovation with scale. Merck, known for its leadership in oncology and vaccines, attracts those looking for a company that is heavily invested in cutting-edge research and development. Amgen, with its focus on biologics and biotechnology, appeals to investors interested in companies that are driving advancements in genetic medicine and biologics. Bristol-Myers Squibb's behavioral finance dynamics are shaped by its reputation for scientific rigor, strong global presence, and adaptability, making it an attractive option for those seeking stability and growth in the pharmaceutical industry.
And unlike Amgen, which focuses more on biotechnology and biologics, Bristol-Myers Squibb's strength lies in its broad expertise across multiple therapeutic areas, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Bristol-Myers Squibb, the focus on innovative therapies, patient outcomes, and global reach provides a unique value proposition in the pharmaceutical industry.
To sum up, Bristol-Myers Squibb's approach to business is deeply influenced by behavioral finance principles, whether it's through their drug development strategies, global market adaptations, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Bristol-Myers Squibb's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.